Jerome Powell said, you could actually say that the Fed is looking through inflation by not hiking. What Jerome Powell basically said in that statement is, you are lucky that we did not consider hiking rates today. Folks, as expected, Jerome Powell has given the big middle finger to President Trump. If you recall yesterday, folks, looking at my notes from yesterday, I told you there were three things that I were looking for. One, how many dissents? We got two as expected, Michelle Bowman and Christopher Waller. We talked about would this be a dovish pause or a hawkish pause? And I indicated that Jerome Powell was likely to be hawkish. More on that in a minute. He certainly was. And finally, was Jerome Powell finally going to take on the big elephant in the room, tariffs? And boy, oh boy, did he ever. I've got lots of quotes from Jerome Powell, but I think we should start with this one. Jerome Powell said, you could actually say that the Fed is looking through inflation by not hiking. What Jerome Powell basically said in that statement is, you are lucky that we did not consider hiking rates today. Again, more on inflation in a minute. But Jerome Powell has stuck to his hawkish nature. He said another thing. We are at the very beginning of tariff inflation. He has certainly anchored himself to this, much like he did the word transitory. It will play out over the next several months. Is he right or is he spectacularly wrong again? More on that in a minute, because I think we are seeing goods inflation, but services disinflation. And that combination could prove very interesting. Let's get into some Powell speak. We can talk about PCE. We'll talk about some earnings, but yesterday was Fed Day and it's all about Jerome Powell. So I collected, I must have read a dozen articles. So these were some of the quotes that I got. First, obviously, remember yesterday or the day before GDP was printed, Powell said GDP is bumpy and quarter to quarter and often revised. I think you're starting to see Jerome Powell not really believe the data that his organization produces. Expect the sense to be explained in the next day or so. Folks, I expect Michelle Bowman and Christopher Waller to be interviewed ad nauseum in the next few days. I believe they are still in their quiet period today. That lifts at midnight. So we should start to hear from both of those folks by Friday morning, would be my guess, Friday afternoon at the latest. Lots of data coming before next meeting. That is true. We have a couple of inflation prints, a couple of jobs numbers. We will get a jobs print tomorrow. I'm going to guess Jerome Powell had access to that early, but we'll see. Again, lots of data coming. That is true. We have a long-term housing shortage, and we haven't built enough. Again, Jerome Powell being asked about the broken housing market time and time again. If you don't know, folks, 3 years ago, I said that Jerome Powell broke the housing market, and we unfortunately have a decade of pain to fix it. We're now 3 years or 30% into that decade. It's still going to be a long slog going forward. Services inflation coming down, but goods inflation going up. This is actually very interesting because when you look at the U.S. economy, whether you like it or not, we are actually predominantly a service-based economy. We talked earlier in the month about goods being imported. I don't remember the exact number, but it was low double digits, something like 13, maybe 18%. Let's call it 15 between friends. 15% of the goods that are on our shelves are imported. So again, maybe Jerome Powell is right, and this goods inflation is just beginning. But if you step back and say, okay, great, we have, 4% inflation on goods. However, 65% of our economy is services, and maybe services are going down 2%. Well, folks, in that environment, we might produce a zero or even a negative inflation because services inflation will dwarf goods inflation. So again, we're going to see some very interesting stuff in the data. More on that in a minute. And finally, expected more tariff impact in inflation data. Expect more tariff impact in data. Basically, it has just started. It is still coming. Lastly, I got from Powell, the labor market is the best economic data we have. Basically, he spent a lot of time, again, talking about the jobs numbers and the weekly unemployment claims and all of that being dirty economic data. He said, basically, watch the top line unemployment number. If you don't remember what it was last month, it was 4.1. It was 4.3 the month before that. The Fed expects it to be 4.5 by the end of the year. So again, lots of stuff going on. Jerome Powell clearly giving the middle finger to President Trump. Again, saying the Fed is actually looking through inflation by not hiking. All right, what does all that mean? Well, folks, we did get the PCE, the third reading on inflation for the month, and the Fed's favorite measure. And folks, it's bad. Headline was expected to go up to 2.5, actually went up to 2.6. Core was expected to go up to 2.7. It went up to 2.8. So both were ahead of schedule. Remember that headline inflation was as low as 2.3 back in May. However, remember, please, I have been telling you about these 2 months for a long time. We actually have one more month of bad data, bad comparisons. Inflation will start to look better as the year goes by. We have one more month. We're 2 of the 3 months through this inflation. People are going to start screaming that inflation is going higher and higher, and it's nothing but the base effect. We all knew it was coming. Unemployment claims, again, came in lower than expected. The job market appearing to be strong. It was expected to come in at 222, came in at 218. We're back to that baseline of 220. Nothing urgent as of yet. I do want to congratulate 3 people for joining school. Again, folks, you got to join school. You got to be around other everyday wealth builders. John, Ryan, and Dan. Thank you for joining school. Please introduce yourself, interact, get all those free goodies, a 10-week boot camp and creative financing and all of that stuff. Go ahead and check that out. Also, inside school, remember, 8 a.m. Sunday, we're going to get the one and only Christian Osgood to come in and talk about what he has done in his impressive portfolio, why he moved to Texas, and all of those other things. Also, since we're on school, talk about the latest accountability group from Frank. They practice seller financing, which I think is a genius move. Seller financing is something going on. I'm working on a deal right now that may involve seller financing. There was an experienced landlord with 20 units sharing his experience. And finally, a new investor talks about the challenges of working with contractors out of state. If you are an everyday wealth builder, I suggest you join, get involved with the community. If you follow Mark the Financial Firefighter, I think he's got a couple of seats left where he could reimburse you for your first month. So go check it out. CoStar doing big things. CoStar is suing Zillow. Get this, folks. CoStar is suing Zillow for over $1 billion. $1 billion in damages because of rampant copyright infringement. Not sure what's going on there. Maybe it's on pictures. I'm not sure what's going on, but wow, something is certainly going on. Looks like we have a trade deal with South Korea. South Korea looks to be doing a trade deal at 15% reciprocal tariffs. Again, another one down, if you will. We did get some earnings that I thought were interesting. MasterCard beat top line and bottom line. Gross dollar volume up 11%. So folks are still swiping those credit cards. Carvana beat top line and bottom line. I don't know if this is true, but I think Carvana might be worth more than Ford and GM combined. That's just wild to me. Carvana being worth more than Ford and GM. I'm not sure if that's right, but I saw that in an article and didn't feel like double checking it, but thought that was crazy. Ford beat top line and bottom line. Actually now expects $2 billion in tariff costs. $2 billion. Is that going to be passed on to the consumer? Are they going to eat those? All of the above? We shall see. And then just for fun, I checked in on Ferrari. They missed on revenue. but they had inline earnings. Ferrari did say that buying in China is slowing down. And then the final one I looked at was Norwegian Cruise Line. I like to cruise. Demand has rebounded and bookings are at record levels. So folks are still enjoying cruises going forward. What else do we have here? Oh, yeah, we got Microsoft, beat top line, bottom line, raised. Cloud and AI are driving force for business transformation. Meta beat top line, bottom line, and guided higher. Daily active users are up 6% year on year. I thought Meta was dying, but apparently Meta is kicking butt with daily active users up 6%. And Robinhood beat top line, bottom line. Gold subscriptions up 90% year on year, and deposits up 76% year on year. Good for them. Fannie Mae reported $3.3 billion in profit. That's wild. Fannie Mae reported $3 billion in profit, and we have the lowest transactions adjusted for population. That's crazy. Fannie Mae also had $3.3 billion, even though they increased loan loss reserves by $900 million. So think about that $900 million being peeled off, stuck in the cookie jar. They could have reported $4.2 billion in profit, but they chose to deploy 900 of that to bad loans going bad. Bank of America warns of dot-com bubble 2.0, says 38% of the value in the S&P 500 is in 10 companies. According to B of A, the price to earnings ratio has hit 27. Where in 2000 it had hit a high of 25. So Bank of America sending out some warning things. At the end of the day, folks, we nailed Fed Day. Powell blamed Trump on tariffs. Powell is a hawk. And we got 2 dissents. So folks, have an amazing day. Don't forget to join school. If you do listen to Spotify, do me a favor. Go subscribe on Spotify to One Rental at a Time. I just saw the other day we're over 10.5 million listens. So thank you for listening on Spotify. I think I have 3,000 plus subscribers. I think that's what you call them. So if you want to do me a favor and get those numbers goosed up a bit, do me a solid. Go to Spotify and subscribe to One Rental at a Time. I would appreciate it. And finally, hearing more and more good news about Steadily. Steadily is saving more and more of my audience money. The more you try, the more you might save. Again, it's not for everybody and not for every situation, but in a world where insurance is rising and eating into your profit margin, it's nice to have options. Click the link in the description below, get it started, find out if they can help you in perhaps as short as 3 to 5 minutes. Have a great day. We will talk to you on Sunday for the daily financial news. Later.